Hello, everybody. Welcome back to another episode of the Dealmaker series. Today, I am joined by Jaime Hochhausen. She is the Business Development Director of Perkins Coie. Jaime, thank you for joining us today. Tell us about yourself and tell us about Perkins.
Yeah, glad to be here. Thanks for having me. Little background on me. I am one of the business development directors at Perkins Coie. I'm here located in Dallas. I actually am a former practicing lawyer, was a litigator for about 7-8 years, and then moved into business development roughly 15 or 16 years ago, mostly on the IP, and then I've moved over into M&A. I've worked on investment bank and business development more recently. And then here at Perkins Coie, I'm working with our M&A teams here in Dallas and Chicago, as well as our digital media, entertainment, and gaming and sports industry group nationally.
Exciting sector.
And Perkins Coie is a full-service law firm headquartered out of Seattle. We're an international firm with offices worldwide, including London and Asia. And as you can imagine, a full-service firm, we can pretty much cover any corporation's needs, big and small. We work with startups all the way through IPO. Our claim to fame, we did incorporate Boeing, and wow. We were part of the IPO of Amazon many years ago.
Wow, yeah. Fabulous. It's not often you get that kind of a range on size of companies that you work with, so that's always fun to hear. I like any companies that give some love to the startups and smaller companies. So that's excellent. So if you're ready, we can jump right into it.
Sure.
Let's get to exploring here. What are you seeing as far as the current state of deal flow?
Yeah. So having come from investment bank for the last year and then back into a firm working a lot with our M&A partners, I am seeing deal flow pick up. As we know, for the last year or so, it's been on the slower side a lot due to, I think, the tariff uncertainties, the interest rates being very high, so the cost of capital is high. And so people just haven't been deploying as much capital and been being much more particular about the companies that they invest in or loan money to. But, seeing our partners have a lot more deal flow and go from being less busy to very busy again. I also have had a lot of conversations with private equity sponsors, and I recently had a conversation with a private equity managing director who mentioned that he had gone to one of the Capital Connection, I think it was the Great Lakes one for ACG, and he has tracked from year to year the number of deals that he sees that he would be possibly interested in out of every conference that he goes to. So he's kept a spreadsheet on this, and it was pretty impressive, but it had gone to, from seeing like 30 deals per conference to like maybe 5 deals. And at this last one, it had gone back up to like, I think he said 17. So we're not quite where we were, 2-3 years ago, but it's coming back. And that's what I've heard. And I'm sure you've been hearing this in the market as well.
Yeah. It's that's probably the consensus. Now we just got, of the time of this interview, we just had the first cut of the year, I think it is, and they were signaling a couple more by year end, so that's good. That'll be good for going into 2026, hopefully. What about deal structures? What are you seeing there? Any particular trends on structures that you're seeing a lot of?
Yeah. I think given my role, I'm not actively involved in the deals themselves, but I have a lot of conversations with our partners on the types of deals they're working on. And coming from an investment bank where we did a lot of more distressed things, and I think people are seeing more distress, there's a lot of creativity involved in these deals, more so than there used to be. Deals could be much more just straightforward, and you either get the capital or if you're selling, much more just straight deals. And now you're seeing a lot more earnouts, seller equity rollovers, just ways to bridge the gap between what a buyer and a seller is expecting out of this deal. And what that means as far as law firms go is that makes the deals more complex as far as, the documents and negotiations and how you structure the deal itself. So people are finding ways to get deals done. I think they're just being more creative in kind of the terms of the deals.
Yep. Yeah. I've heard a few folks kind of echoing the same. There's been more just straight cash deals and a little bit less of the some of those risk hedging structures where there might be an equity rollover, from the owner, but they are seeing a lot more cash deals being done. That's something that's changed here in the last quarter, I'd say. So that's an interesting insight there. What about industry or sector? Or what are you seeing as far as activity there? Any particular industries that you're seeing are really picking up?
Yeah, I mean, I think AI is a very hot topic. Tech has always been busy, but I think it's definitely picking up, especially with AI. Data centers, clean energy. Here in Texas, you always have energy and infrastructure. I think that's always going to be pretty hot here. Industrials seems to have kind of stayed busy from what I've seen. Supply chain, after COVID, I think logistics and supply chain, trying to move more things into the United States and rely less on, especially China. But if you are having multiple resources for chains, I think the investment into that space from either buying other companies or, just investing into building those out, I think is grown and we'll continue to see it grow. I know some companies here in Texas that are doing a lot of M&A in the United States around supply chain and logistics. Not surprising to see that. Another thing that's been interesting, at least for me, because I work with our sports industry group, is the move of private equity into the sports arena much more and more, which is putting capital into the sports teams for their venues, for updating them, for adding technologies to them. And it's an interesting thing to see. And I'm curious to see how that goes. But I think we're going to see it more and more. And sports is a hot area. It's unlike some industries, it's not going away. It's building and growing. So there's still a lot of money in it and people want to invest in it.
I think that's a really interesting insight there too. As a matter of fact, just this morning, I caught wind of a new fund that's being launched here soon from some former players in the NFL. And I thought that was pretty interesting. And the way that they're structuring it is with a really super low investment minimum of $500. So it's
500. Yeah. That's really low.
500. Yeah, it's for accredited and non-accredited investors. So they're trying to enhance the accessibility. And just kind of to your point, they are looking to open up investment to the technology as well as the infrastructure and even team ownership. Mm-hmm. I guess if you're coming at $500, it might be fractional, but nonetheless, that's a really, really interesting insight that you just made right there. That's an interesting sector for sure. I think you and I might have to talk a little bit about that more offline. But let's move a little bit more macro. How is the current climate with interest rates and tariffs impacting deals? You kind of touched on this a little bit, but what are you seeing there? If you can kind of elaborate a little bit more.
I mean, obviously, you just mentioned the rate cuts. So it'll be curious how that, it wasn't significant. So, we'll see. But I do think, what used to be not easy, but easier deals to get done are just tougher because of the interest rates. People are a little more reluctant to invest in companies or especially ones that would have a heavy debt financing component. When there's a larger equity component, that's a little easier to do. But, I don't think these deals are stopping because of it. I think there's the tariff uncertainty has gotten a little more stable. I think you still have uncertainty around it, but people are basically going to their advisors like the lawyers and saying, if the worst case scenario happens, how do we structure the deal around this? Or how do we make sure we're protected? And so just thinking in broader terms of the interest rates, but also the tariffs and assuming almost the worst case so that you're advising at that level because it could change and get better or it could change and technically get worse. I think, legally, financially, strategically, just really thinking about how to navigate that. But I don't think it stopped. I think it kind of slowed them for a while at the beginning of the year. But now people want to get back to doing business. So they're just being more creative, but also being careful.
Yeah. A little more lengthy due diligence process.
Yes, for sure.
Yeah. What do you think as far, let's kind of shift again a little bit here toward DFW and Texas where we are. What makes DFW or Texas unique versus the other markets?
Yeah, that's a great question. I mean, I've been in Dallas for about 4 years now. And what I see and hear in the market and what is just, facts is DFW has a very large concentration of Fortune 500 companies. You see a lot of people and businesses, but a lot of talent has moved here from other states, especially California, and that's bringing businesses because of our, tax advantages here for having a business, and as well as for having employees here. Having no income tax is very enticing. And so, and you have the space, unlike a lot of other states, to continue to build and grow infrastructure wise. So I think it is creating a very interesting job market and growth in Texas in general, but in the United States, I think we're just seeing a lot of that because of our business-friendly environment.
Yep. I like that perspective too. I had actually forgotten that you've been here for only 4 years. Most of the people I've spoken with have been here forever, so they have a different response to that. So I appreciate your answer there.
It's what their response is.
You did kind of mention at the end, it's usually about the business-friendly environment, but that's the only answer, which is still great. We are a very business-friendly region and state.
But I think we're people-friendly too.
Yeah.
And I think that businesses know that too. So it's an advantage for them, not just as a business financially, but also for finding talent, because it's very large. And so you have a lot of people who have moved here and who are from here, lots of great universities, so highly educated people. But I think also just it's a friendly environment. People enjoy Texas. Also, the no income tax for their employees. So that's enticing as well. So I think it's all around good for business.
Yeah, it is for sure. All right, let's look into the crystal ball here and think about the future. What do you see coming next in the M&A and transaction world?
Yeah, I'm sure this is going to sound like what everyone else said. But, I think we've seen, at least from the private equity side, that they haven't been investing and they're really looking to go in and use that dry powder. So I think we're going to see a lot more buy sides from them, but I also think we're going to see more exits because over the last few years, they've been holding on to businesses and, a lot of them are at that sort of 5-ish year mark where LPs want their return. And so I think you're going to see the buy and sell side getting busier. I also think, for like a founder-led businesses, I've heard a lot more founder owners talking about exiting and getting ready to prep for that. We're actually doing a dinner series, or at least one dinner right now, possibly a series around that, and bringing business owners to talk about the risks and what their worries are and start prepping. What do they need to be thinking about to exit? But I'm hearing more and more of that in the community when I meet founders. So I just think it's just becoming more friendly with both buy and sell side, given things are starting to look more positive as far as interest and other things.
Yeah. I actually haven't gotten that in the last few episodes. Not quite. It's usually people are kind of thinking, AI will be gangbusters for the next few years, probably, which it will. But no one's mentioned the buy side and the sell side and how, a lot of investor money is probably overdue to be returned at this point. You're breaking over 7 years. If you're coming out of COVID, you're about 7 years out now. So no, that's an interesting point. And I think like we kind of touched on earlier with interest rates now apparently coming down, I think we're going to have a pretty good set of ingredients ready to go for 2026, where there'll be a lot of transactions, like you said.
Yeah. And I also think, at least what I'm hearing from a lot of the companies I talk to, is there's a lot of more cross-border deals that I think are going to happen, depending on the industry, of course, but some of the larger corporations, so maybe above the PE level, I'm hearing about investments over in Europe and other places that we've been chatting on. So I think we're going to see more of that too.
That could be really interesting. I've seen a few events, reports here and there this year about cross-border deals and some folks that are trying to make moves there. So maybe that'll be the case. We'll see. That could be interesting.
Yeah.
Jamie, I appreciate your insights. Those are excellent. Those of you watching, I hope this is as useful for you as it is for me. If you'd like to catch some of the other episodes of the Dealmaker series, feel free to check out my YouTube channel as well as my LinkedIn page. Jamie, thank you so much for joining us.
Happy to be here. Thanks for having me.